everyone. Welcome back to India Business Insights. We are back with an update on India's economy. Stay tuned to find out more. Before we move ahead, if you like our content, please do not forget to like and share our video and subscribe to our channel. Hit the bell icon to receive notifications about our latest uploads. Let us now take a look at the recent economic developments. RBI held the Monetary Policy Committee meeting from 3rd to 6th April. While a rate hike had been expected, the central bank pressed the pause button for this meeting to observe the effect of the previous hikes. This indicates a delinking from the global monetary tightening trends as India's strong economic foundations have insulated it from the fallout of the various financial crises to a great extent. Repo rate is unchanged for now at 6.50%. Consequently, standing deposit facility remains 6.25%, while the Marshall Standing Facility and bank rate remain unchanged too at 6.75%. The committee also increased the GDP growth forecast for financial year 2023-24 from 6.4% to 6.5% and lowered the expected inflation rate for the same from 5.3% to 5.2%. The annual rate of inflation in the wholesale price index for February 2023 continued its downward trend and eased to 3.85% due to a fall in price of crude oil and natural gas. This will help industries improve their margins. Inflation in the consumer price index fell to 6.44% in February 2023 from 6.52% in January 2023. The consumer food price index also saw a marginal decline. While rural inflation rates declined, inflation in the urban areas increased. Nevertheless, rural consumer price inflation remained significantly higher than the urban areas at 6.72% compared to 6.10% in the latter. While a healthy Rabi harvest may help lower the inflation in the coming months, the unseasonal rains and OPEC's decision to cut oil production may strengthen the inflationary pressures in the economy. The third quarter of the financial year 2022-23 saw the current account deficit decline from $30.9 billion, which was 3.7% of GDP in quarter 2 of financial year 2022-23, to $18.2 billion, which is 2.2% of GDP, fueled by a narrowing of merchandise trade deficit to $72.7 billion from $78.3 billion in the previous quarter. Services exports grew at 24.5% on a year-on-year basis, led by the rising exports of software, business, and travel services. Net services receipts increased both sequentially and on a year-on-year basis. As per data released by the Ministry of Commerce, India's total exports in April 2022 to February 2023 period are estimated to be $702.88 billion, exhibiting a growth rate of 16.18% year-on-year. Overall imports in the same period amounted to $817.46 billion, growing at 19.93% year-on-year. Services trade showed a surplus of almost $133 billion for the April 2022 to February 23 period, an increase of around $32 billion compared to the same period last year. It was overpowered by the deficit in merchandise trade, leading to an overall negative trade balance of $114.58 billion in this period. India's foreign trade is estimated to cross $1.6 trillion or 48% of India's nominal GDP for the fiscal year ending March 2023. In 2021-22, India's foreign trade stood at $1.43 trillion. Inward remittances touched an all-time high of $107.2 billion in 2022. Thus, favorable trends seem to be emerging as far as the external sector is concerned and are likely to aid India's growth story. India's forex reserves, which stood at $606.47 billion on 1st April 2022, slumped to $578.44 billion on March 31, 2023, posting a decline of $28.03 billion during the year due to RBI's efforts to stabilize the rupee. Also, according to the Ministry of Finance, for March, the rate of exchange of 1 unit of US dollar equivalent to Indian rupees was rupees 83.70 for imports and rupees 81.95 for exports. India's recent agreement with Malaysia to allow trade settlement in Indian rupee is a positive sign for the future. For the financial year 2022-23, foreign portfolio investments showed a net outflow of 5,510 million US dollars. This seems to be driven by the aggressive rate hikes in the US and the creation of a risk-averse atmosphere due to global uncertainties. Gross FDI for the first 3 quarters of the financial year stood at $36.75 billion, 15% decline from the previous year. However, the various banking sector crises that rocked the global financial sector may aid India in emerging as a reliable investment destination going forward. Coming to government accounts, total receipts for the April to February period of the financial year stood at rupees 20 lakh 39,728 crore, while rupees 34 lakh 93,590 crore were spent during this period. The fiscal deficit was rupees 14 lakh 53,862 crores in this period and has grown by 10.43% year on year. Rupees 1 lakh 60,122 crore was collected as the gross GST revenue in the month of March 2023, crossing the 1.5 lakh crore mark for the fourth time in the 2022-23 fiscal, with a year-on-year growth rate of 13%. This is the second highest collection since implementation of GST, next only to the collection of April 2022. The total gross collection for 2022-23 amounted to 18.10 lakh crore. The Manufacturing Purchasing Managers Index expanded for the 21st consecutive month in March and reached a three-month peak at 56.4 on the back of easing input cost pressures, which reached the second lowest level in over 2 years. Demand resilience and expansion in new orders also helped support the sector. The services PMI for March, while expansionary for the 20th consecutive month, declined from its 12-year peak of 59.4 in February to 57.8 as new business inflows and hiring activity slowed down. The March 2023 Consumer Confidence Survey of RBI shows continued recovery. The current situation index rose by 2.2 points, though it remained in the pessimistic zone. The future expectations index remained positive despite marginal deterioration compared to previous levels. Consumer sentiment about current spending improved based on both essential and non-essential items. While the current perception regarding the overall economic scenario showed greater optimism than the previous survey, the future expectations witnessed a mild reduction in positivity. India's unemployment rate reached a three-month high when it rose from 7.5% in February to 7.8% in March 2023, as per CMIE data. Unemployment in urban areas at 8.51% exceeded that in rural areas, which was 7.47%. Labor force participation rate declined to 39.8%, and the total employment reduced to 407.6 million in March from 409.9 million in February. Haryana experienced the highest rate of unemployment among the states. Bank credit to agriculture and allied activities rose by 14.9% year on year in February 2023, while credit to industry registered a growth of 7%. Credit growth to services sector was robust at 20.7% due to the improved credit offtake to non-banking financial companies. Personal loan growth accelerated to 20.4% driven by housing loans. The Indian stock market has slipped from a range of 17,500 to 18,100 to a lower range of 17,500 to 16,700 or 800. The index is expected to move in this range for the next few weeks. The two major reasons behind this sentiment are the rise in global uncertainty, specifically in the banking sector after Silicon Valley Bank issues, and the El Nino effect expected, which has caused concern over rural demand due to droughts and failure of crops. High frequency indicators present a mixed picture, with some indicators continuing to do well. However, others' performances are pointing to a loss of steam in the economy. The index of 8 core industries slipped from 157.7 in January 2023 to 145.4 in February, with 6% year-on-year growth rate, a three-month low. Crude oil production contracted by almost 5% on a year-on-year basis in February. Cumulatively, in the period April 2022 to February 2023, the index grew by 7.8%. Slowdown in the index is expected in March due to the unseasonal rains. Vehicle retail sales also showed a positive growth rate. In March 2023, total vehicle retail sales experienced a 14% year-on-year increase, a little lower than the 16% growth seen in February. Except for tractors, all categories saw double-digit growth. Total transactions via UPI increased both in volume and value in March, with 8,651.63 million transactions amounting to rupees 14,04,950.59 crore. Second advanced estimates of national income for 2022-23 released by the National Statistical Office estimated the real GDP at constant prices at rupees 159.71 lakh crore with a growth rate of 7%. Per capita GDP is expected to grow at 5.9% on a year-on-year basis. Private consumption emerged as an important engine of growth for this period. World Bank slashed the expected growth rate of India's GDP in financial year 2023-24 to 6.3% from 6.6% on account of a fall in consumption due to higher borrowing cost. It is in line with CRISIL's forecast of around 6% growth rate for India for this period. India has sound macroeconomic fundamentals which stand it in good stead. The favorable trends in the external sector, coupled with the resilient domestic demand and the healthy financial sector, should aid India's growth. However, with the unseasonal rainfall and a potential heat wave underway, the Rabi harvest remains threatened. The global uncertainty due to continuing geopolitical tensions and the multiple shocks to the global banking sector and the resultant caution in financial decision making and elevated inflation will further limit the domestic demand. What are your expectations for the Indian economy in the days to come? Do let us know in the comments below. If you enjoyed our video, do like and share it and subscribe to our channel for more such content. We will soon see you with a new video.